If you were given a test, wouldn't the answer key come in handy? Hi everybody, I'm Brandon Ayers. Thanks for coming back to my YouTube channel here at Ayers Rock Planning. This is our next episode of our Income Tax Bootcamp, episode 3. We do have, again, our companion audio version on our podcast called Death and Taxes, found wherever you get your podcasts. And if you really want the full immersive experience for this bootcamp, it really does help to listen to both. I kind of overlap topics, but I do not cover the same things. For example, the episode I just recorded for the podcast is all about deductions, exclusions, credits, and exemptions. So while I'm going to cover some of the things here on the 1040 form and show you the 1040 form, I'm not going to cover over what the difference is between those 4 things. That's in the podcast. So if you really want the deep dive in the income tax code and understanding how you can make it work for you, I highly suggest both this channel and our Death and Taxes podcast bootcamp as well. There are other places you can find me. I'm on Twitter at Ayers Rock Plans, also on TikTok at Ayers Rock Planning, and Instagram, Ayers Rock Planning. Website is www.ayersrockplanning, big surprise there.com. You can find me there. So without further ado, let's jump into what this 1040 form is, because it really is the answer key to your test each year. You have this test from the IRS, but you probably don't understand the answer key, and you can start a lot more there. So let's take a look over here. So this is the 1040 form for year 2021. So this is the income tax return you will file for income you earned in 2021. So you can see here basic information. I don't need to talk through that. But then we get to standard deduction. Can someone can claim you as a dependent or your spouse as a dependent. Most people, that's not true, but perhaps for some people they are claimed as dependents by somebody else. For age or blindness, there's actually bumps in a lot of deductions. Interestingly, the government views age as basically a disability. Think about Social Security. It was originally disability insurance for being too old. But anyway, beyond getting past that, so you check here based on your birth year. You list your dependents and their information, but let's get to the meat of it. So here we have a bunch of things you enter, a bunch of information: wages, salaries, tips, tax exempt interest. What interest is tax exempt? Municipal bond interest is the most obvious tax exempt interest I can think of. But some interest is taxable, like interest from your investment account, your post-tax investment account each year. You get those 1099 dividends or 1099 interest each year. You pay tax, and those will go line 2B. Qualified dividends, ordinary dividends, IRA distributions and the amount that might be taxable, pensions, Social Security benefits and the amount that might be taxable. So those are all, hey, here's income I have, and here's what's taxed. So we're coming up to a tally. Then you have capital gains, either gains or losses. Let's say you sold investments this year, an investment property, didn't reinvest. That'd be an example of a gain or loss you would realize in 2021. And if you need to, you can have answer Schedule D. I'm not going to get into all the schedules today, but it's important to understand and use the schedules to your advantage, because this is by scheduling things out, especially for business owners, small business owners, big business owners, multiple business owners, you can really boost the amount of tax savings that you receive by using the right schedules. So other income from Schedule 1, line 10, you do a calculation to get that number. They want you to throw it on there. Then you add all these lines, and this is your total income. So this is where I want to stop here for a second. Total income. What is that? Well, it's just the summary. Plus, 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 minus maybe a capital loss or whatever else it is. Total income. Sometimes it's called a gross income, although using gross as the word can get confusing here. So then, after that, let's say, you add all these things up and you're at, early in the podcast, I used 100,000. Let's stick with that. You're at $100,000 here. Then you get adjustments to income. This is above the line deductions. If you ever heard that term, this is above the line deductions. And Schedule 1, which we'll get into not this episode, but later on, those are the total adjustments you can make. So you can see here, now you subtract line 10 from line 9. So you take this number, let's say it's $1,000 from your, let's say $100,000. Your adjusted gross income would be $99,000. Adjusted gross income, AGI, another very important term. As it sounds like, it's your gross income with the adjustments that you took out on Schedule 1, line 26, right? So in my example, you got your 100,000, you take your 99, now you take your 1,000 adjustments. Now you're at $99,000 of adjusted gross income, AGI. This is one of the most important lines of a tax return that I look at, your adjusted gross income. Now this line here, on past versions, it was a little easier to see, but when you hear above the line and below the line, they're talking about this little line here, right below what's currently line 11 on the 1040. So this line, above the line deductions, would happen here on line 10, adjustments to income from Schedule 1, line 26. Below the line would happen here. So let's see what some examples of below the line deductions are. You can read about charitable deductions. Maybe you take your standard deduction. Standard deduction for married filing jointly is $25,900. So for most people, they're not going to have the amount of itemized deductions that would exceed that amount. So most people these days are taking that standard deduction. I imagine in 2026, fewer people are going to be taking that standard deduction because it's going to be cut in half, at least, if not sooner. I make the joke here. I always rely on Congress not doing much anything. And currently, it seems sure enough that nothing's getting through the Senate, whether you agree with that or not. The fact is that it doesn't seem like much anything is going to get through the Senate. So I would imagine that 2026 is when we're looking at that standard deduction being changed back to about half the amount. So that's a below the line deduction. So you either take your standard deduction, or if you itemized from Schedule A, which again, we'll get into Schedule A later on, next episode. Matter of fact, spoiler, a little teaser for you. And then you can take your charitable deductions, you add those together, and those are your below the line deductions, except for the next line, qualified business income deduction. That's all I'm going to talk about it today. Maybe it applies to you, maybe it doesn't. We'll get into if it does later episodes. This is just about understanding this form. Then you add these lines, 12C and 13. So you add all those together, then you subtract. This is simple math. This is not complicated. This is cocktail napkin arithmetic, or these days, smartphone arithmetic, right? Your taxable income. You take your adjusted gross income, line 11, and you subtract line 14, which is the sum of 12 and 13. So that's your below the line deductions to income. And this is the line, maybe for a lot of tax preparers, this might be the most important line. For me, it's probably the second most important line that I look at, what you will be taxed on, what they will take as income that's taxable income. Now, let me just go on a brief aside here. Back in the promotion of the 2017 Tax Cuts and Jobs Act, a lot of Congress people were begging, most people are going to be able to do their income tax return on a postcard, right? Picture this postcard. They didn't quite get there. There's a different form that's more postcard size, but they didn't quite get there. But you can tell how they wanted to cram this. You can see visually how this is about a two-sided postcard that they wanted to cram all this stuff into. But they didn't quite get there. There's another page. So now we get to the other side. So I'm not going to go through line by line, but what you can do here, you can see you have different schedules. You add these in, and they come up with, eventually, the punchline is here at line 24, one of these top 5 most important lines of your tax return. Line 24 is your total tax. That's the amount of tax you have to pay. Some of it you might have paid already in either scheduled payments or in withholdings, but that's the amount that they're saying, hey, you have to pay. They schedule all these things in here. And this is where, by the way, you can start to see the difference between credits, deductions, exclusions, and exemptions that I talked about in the podcast, Death and Taxes. Check it out. Give me a 5-star review. Give me a like and follow here. Talk to me in the comments. All right, moving on. So then they say, okay, this is the amount of tax you have to pay. Let's see how much you did pay. So they get into line 25. How much did you withhold on W-2s or 1099s or other forms? And then you get the total here. How many estimated tax payments did you make? Now, do you have any credits? Your earned income credit. Not going to get into the details of what all these things mean. Those are rabbit holes upon trenches, upon tunnels. I'm not doing it in this episode. Non-taxable combat pay. Maybe that applies to you. Refundable child tax credits. You take all these things, American Opportunity Credit, they show up on these tax returns. All the things you hear about in the news. Then you add these lines and you get your total amount of payments. Total amount of payments. And then it's a simple equation from here. Refund. If line 33, this line, is more than line 24, this line, this is the amount you overpaid. So if you're looking to get a return on your tax return, which I'll argue is not necessarily a good thing. It's obviously fun and pleasant, but it's your own money you're getting back. Basically, you loaned the government money for a period of months. I mean, it's much less painful than paying out extra, but it's your own money you're getting back. Nobody's doing you a favor. You did the government a favor. Anyway, that's another topic for another day. So if you want to just, whenever you get returns, do I owe anything or do I have to pay? Go look at line 34 or line 37. If you get a return, you'll see a number here. If you have to pay, you'll see a number on line 37. So that's the tax return. Then you say, hey, here's who do you want to be able to discuss the return? Maybe you're a preparer. You sign it, date it, spouse signature and date, preparer's information, send it in. You got your tax return done. So that's the 1040 form. I realized I brushed over a lot of stuff, and that was intentional because we could get into an hour-long video on a tax return form, which I can tell you is going to get even less views than this one does. Which reminds me, please, if you've gotten this far, you've obviously liked this video. If you think I've earned a subscription, please hit that subscribe. Please hit that bell. We'll come out with videos every week. I'm putting a big effort in to getting videos out to you, to educating you, to informing you, to entertaining you about these topics. If you want to hear about something, let me know in the comments. If you want to follow me other places, Death and Taxes Podcast, TikTok or Instagram at Ayers Rock Planning, Twitter, Ayers Rock Plans. Those are good ways to get a hold of me. You got this YouTube channel. I'm really proud of it. I think we're going to go to a special place. Anyway, I hope you found this informative. I hope you can see the lines that you need to look for on your 1040 form. If you want to know more, reach out to me. Reach out to your own personal tax preparer. Share this video with people you might feel interested. Other than that, have a great day. Stay safe. Be kind to each other. Adios.